Welcome, everyone. This is Greg Martin and Chris Hunter with Aggie Growth Hacks. Thank you so much for joining us for the first Aggie Growth Hacks workshop, or Hackshop as we're calling them. And we just want to really say, first off, thank you so much for the Aggie Growth Hacks community to be able to come together and to speak with entrepreneurs and to be able to learn your stories and to celebrate your successes and quite frankly, learn how you have become so successful. It has been so meaningful to Chris and I over the last 2 years. So at the beginning of this year, we wanted to find some way to bring you additional value. And so we partnered with our sponsors at the McFerrin Center for Entrepreneurship at Texas A&M, and we came up with these monthly hack shops. And one of the things that we've heard over consistently from entrepreneurs is that there's a lot of great information out there, and there are ways to improve and to help your business grow and achieve your goals. But sometimes when you go to these workshops and you just are downloaded with so much information, it sounds great when you're going through it. But then when you actually come back and try to apply it, it's that one or two, those first steps that are so difficult. And so it really, while it sounds great in theory and to be like, yes, my business can definitely benefit from this, but actually putting it into practice is difficult sometimes. So what we've designed with these Aggie Growth Hacks, these hack shops, is a very narrow workshop where we'll talk very broadly, high level over a topic, but then we're going to go deep and we're going to give you 1, 2, maybe 3 actionable things that you can tangibly do today in order to have immediate impact. Because I think that if you have immediate impact and you start seeing immediate success, then that's going to encourage you. That's going to make it a little bit easier to be able to do this. Because quite frankly, being an entrepreneur is hard. Improving your business is even harder. And so if we can help you find ways that not to be wide, but to be very narrow and to do that. But then also, quite frankly, to be able to say, okay, here's what you can expect, both the good and the bad. And we're going to cover a whole range of topics this year. We're going to start today with something that is near and dear to both Chris and my heart, profit first and the profit first system. But we're going to talk about marketing. We're talking about branding. We're going to talk about sales. We're going to talk about lean operation. We're going to talk about HR. How do you hire and find the right people, attract the right people? All things that we've consistently heard from entrepreneurs that you're challenged with. And again, these things aren't designed to at the end of this, you'll be able to implement the system 100%, no problem, but you'll be able to dive deep and to have actionable things to do. So with that, let's go ahead and let's kick this one off. Like I said, this one is going to be all about profit first. And if you don't know what profit first is, then I feel very sorry for you. This is something that I think that every entrepreneur should learn. And quite frankly, I think every entrepreneur needs to implement this into his or her business. What it is based off a book by Mike Michalowicz. Mike Michalowicz is one of the best, most well-known, most successful, best-selling business authors. And he's written 6 or 7 books, and all of them are absolutely amazing. But Profit First specifically goes in, and it's a cash flow methodology that when you implement it into your business is guaranteed to be permanently profitable. And when I say profitable, I'm not talking about the type of profitability at the end of the year when you go to your accountant and they get your tax return done and they say, congratulations, you made $100,000. And you're like, where the hell is it? Because it's not in my account. It's the type of profitability that you say, congratulations, you have $100,000. Sorry, you owe $30,000 in taxes. And you're like, no sweat. I got 120 grand already sitting in my profit account, and I've got 50 grand sitting in my tax account. So who do I write the check out to? All done. So it is a system that is really helps with the cash flow. All right. So now I'm going to try and jump into some technology here, and I'm going to try and share my screen. And we're going to talk through super high level how the profit first system works. And the basis of this really comes down to a couple different things. First off, I want to talk about the mechanisms of it, and then I'll talk maybe a little bit about the background. So profit first, you have different accounts. And most businesses today have one, maybe two accounts. So you have an operating account, maybe a savings account. But with the profit first system, we're gonna have multiple accounts, and we're gonna start off with an income account. All right. So that is where all your deposits, everything that you have is going to go, all your deposits are going to go into the income account. And then you're going to have different sub accounts. You're going to have a profit account, profit first. Make sure you take in your profit first. Then you're going to have a tax account, because every entrepreneur has that silent partner, that a silent partner called Uncle Sam, and he wants his taste of your business's profits, and he's going to get it. Doesn't matter if you have the cash or not. Uncle Sam's going to get his piece. So you want to make sure that you have money set aside to pay that silent partner. Then the next account you're going to have is what I call an owner's compensation, or OC account. And this account is specifically designed to compensate you, the owner. Being an entrepreneur is super difficult and super hard, and you are the most important employee in your business. If you got hit by a truck, your business would not survive. Even if you've got the best manager in the world, you're the one that has the vision for the business and to be able to look forward. So you need to make sure that you as the owner are compensated, and you as the owner have enough cash that can be taken out of the business in order to support you and your family. Because if you don't do that in the long term, that's just not sustainable. And then finally, lastly, you've got your OPEX account. Sorry. So this is your operating expense account, or this is what most people have. This is where all the expenses that go into your business come out of. And so you put all the money into the income account, and then based on how your business, how the cycle of your business, you go through, some people do it once a week, some people do it twice a month, some people actually do these allocations monthly. But you take money out of the income account, and then you move it into the profit account, you move it into the tax account, you move it into the owner's comp account, and you move it into the OPEX account. And so what you do is, so let's say that you've got $100,000 in your income account. And then when you make these allocations, let's say you're going to take 10% and you're going to put it into the profit account. And then you're going to take another 10% and you're going to put it in your tax account. The owner's comp account, you're going to say put 15% in. So you've got 10% in the profit, you got 10% in the tax, you got 15% in the owner's comp. That's 35%. That means that you have 65% of every dollar that your company brings in order to run your business. Now, a lot of you are probably thinking, holy crap, how am I going to be able to do that? I get money in, and as fast as I get it in my business, it goes out. So that goes through. So that's kind of the overarching mechanism of it. But the beauty of this is that the principles that are behind the profit first system, the first one deals with exactly the chance. How do I go from having a cash eating company, and in order to be able to set money aside for profit, for tax, for owner's comp? And the way that you do that is the principle of Parkinson's law. And if you're not familiar with that, what Parkinson's law says is that a job or a task will increase to consume all assets, whether that be time, cash, resources, whatever it is, until it's completed. So think about it this way. When I'm trying to lose weight, I can go and I can have a plate that's this big, and I can load it up with any type of food, whether it be, your quinoa and your healthy food, or mashed potatoes and fried chicken. But I'm going to load it up and I'm going to eat everything that's on that plate. But by applying Parkinson's law, if I take that plate and I shrink it down, I get a smaller plate, a plate that's 25% less. Well, I'm still going to fill that plate up, But when you look at the amount of food or the amount of calories that I consume, because I've got a smaller plate, I'm going to consume less. And it's the same type of thing. Your business right now, if you have an account and all your money is in that account, your business will, the operations of it will expand to consume all the cash that's in that account. But if you constrain it, if you shrink it down, if you have the discipline to be able to say, no, you only have 65 cents out of every dollar to run your business, then you get creative. When you first start out your company, you may not have, the cash on hand to have a really big marketing spend or to be able to develop your brand to communicate that. But what do? You go guerrilla marketing. And Chris will be able to speak with this a lot better, be able to talk about how do you effectively communicate to your perfect client. It doesn't have to take money. A lot of times just throwing money at it doesn't work. And that's just one example. Another example is maybe you've got a subscription service or some type of system that helps you in your operations of your business. Well, when you first start out, you don't have the ability that everybody doesn't have a nice shiny iPad. So what do? You figure out a system that is cost effective, but you're constraining the cash. Okay. So the first thing, so we talked about the different accounts. We talked about the Parkinson's law and shrinking the plate or shrinking the cash. And then we want to talk about actually the movement of money into the profit, into the owner's comp, into the profit tax, owner's comp, and the OPEX. I relate that to when you're working out and you're getting stronger. It's muscle memory. It's doing it over and over and over again. And by being disciplined and learning that system and being comfortable with that, that's the beauty of it. Okay. So I know we talk really, really high level, but so let's dive deep. Let's dive into specifically what are 3 things that you can do today right now in order to make this effective and to start seeing immediate success. Actually, I'll give you 3 and then 1 bonus. The first thing I want you to do is I want you to go open up a profit account. That's it. Don't worry about opening up all the different accounts and worry about the different percentages and the allocations and when you're going to do it. 1 account, people. 1 account. Set up 1 account. That is your profit account. And then every time that you make a deposit into your operating account, take 1% of that and move it over into your profit account. 1%. That's it. You can't tell me that you can't run your business on 99% of the revenue that you bring in. You can't tell me. I refuse to believe that. Let's put it this way. Let's be practical. Let's assume that you've got a business and it's a really good business and you have expenses of $480,000, almost $500,000 a year. Okay. That's a pretty good sized business. So you're telling me that if you bring in $480,000, you can't, and you spend it all, that you can't run your business on 99% of that. So think about that. 480,000, 1% is $4,800. That's $400 a month. That's $100 a week. If you needed to, if your sales dropped by 1%, I'll bet you'd figure out a way to adjust your expenses to be able to do that. So I'm talking 1%. So task number 1, super simple, super easy. Go open up a profit account. And then every time you make a deposit, take 1%, move it over into your profit account. Yep. Chris, we have a question
here from Dave. Where does that profit account, where is it supposed to be?
So the book talks about a couple different things that you can do. Another principle that the book talks about is that you can have that account at a separate bank. And if that's and the purpose of that is to make it terribly inconvenient to get to, because if it's sometimes, depending on the entrepreneur sees that money sitting over in a savings account, in the profit account, and they're like, oh crap, I've got, an unexpected bill came up, something happened. I got $5,000 sitting over in this profit account. I'll just take it for myself. It's really my money anyway. I'll just take it and I'll, move it over to OpEx and I'll spend it and I'll make it up later. I'll pay myself back. So you want to eliminate temptation. And so having a separate bank does that and making it terribly inconvenient to be able to do that, meaning you don't have online access, you don't have checks. You've got to drive across town to get a cashier's check when it's time to get the money out of that account. Sometimes when I work with entrepreneurs, they're like, look, I see that and I understand that principle, but I'm more disciplined than that. But what I can do to help them, and every bank is a little bit different, but some of them have had a lot of successes that I actually hide those profit in the tax accounts so that you can see them when you transfer money from the income account into that. But when you pull it up on your app, it doesn't show on your app. Well, if it doesn't show on your app, then it's not there. I'm not going to spend it. So great question. Hope I answered that. And if there are any other questions throughout this, please email or on the text, either send it to Chris or myself, and we'll be able to make sure that we've got that. We're going to try to have a little bit of time of Q&A at the end of the session. So tip number 1, open up just one account. Profit account, start moving 1% over. Tip number 2, and I know that this one's a little bit harder, but you need to talk with your bookkeeper or your accountant, and you need to set up a recurring calendar meeting every single week for 15 minutes, just 15 minutes, and you're going to go over your numbers. And I understand you did not start your business in order to nerd out on financial reports. I get it. I am that nerd. I look at financial reports every single day. But what I enjoy about financial reports is that I've learned their language. I've learned to understand how do I look at an income statement and a balance sheet and to be able to tell the story of what's actually happening in your business. And I know a lot of entrepreneurs haven't received this training, or if they have, it was accounting and back in high school or college, and it was boring and it was dry. And I get that, but you need to know your numbers. You need to know the financial health of your business. If you don't know that, then how in the world can you as the leader make decisions about what you're going to do? Not only short term, but long term. I mean, I have yet to meet an entrepreneur that says that they didn't want to be long-term successful. But if you don't know where you are, then you're not going to know, do you have the capacity to execute your plan, to grow the way you want to go? So you have to learn that. So the task is to set up a weekly, at least a weekly recurring appointment with yourself, your business partner, your bookkeeper, whoever provide those financials for you, and then look at them specifically for 15 minutes, just 15 minutes. Now, if you want to talk further about the specific things that I think that you should be looking at on a weekly basis, I'm more than happy to kind of nerd out and to dive deep into that. But the fact of the matter is that if you start seeing what you've spent in the last week, what you spent in this current month, if you start looking at every single week, again, for only 15 minutes, and you start seeing cash flow out of your business on a consistent basis, then you're going to start finding places that you can cut expenses. And one of the things that I talk with entrepreneurs, 2020 has been really, really tough. And there was a lot of expenses that were in businesses in February of 2020 that aren't in businesses now, because by necessity, you had to get lean and mean. But every time I work with a client, with a profit first client, and have them implement, they find somewhere between 3 and 10% of low hanging fruit that you can cut and not impact the operations of your business. Whether that be subscription services or magazines, or maybe it's an online tool or something like that you haven't used in 6 months. Well, if you haven't used it in 6 months, well, then why are you paying for it? And quite frankly, why are you paying for Netflix, Amazon, Hulu, Disney Plus, Paramount Plus, this stream, that stream, HBO Max, all that stuff? I mean, you're an entrepreneur. What are you doing? You don't have extra time to watch all that TV. But I mean, the fact of the matter is that those subscription services, it's a brilliant business model. I'll sneak it in right at, $5.99 or $9.99. That's the cost. I mean, shoot, I go out and get a good hamburger meal for less than for more than that. So $9.99 is not going to hurt me. But when you have 5 of those all stacked up on top of each other, on top of, different expenses. I actually had a client one time. Let me tell you this quick story. I had a client that was in very aggressive growth mode, and they grew so much that their sales force like doubled like within 6 months, and the phone system that they had didn't fit. So they got a new one, but no one went back and canceled the old one. That was like $18,000 a year for 2 phone systems. And the worst part, they've been paying it for 2 years. And that's because no one sat there and actually understood the numbers, what was going on. And the real kicker of that story is and I don't mean to laugh. It just really, really sucks. They had to pay $2,000 in order to get out of the contract. So they've been paying $36,000 for the last 2 years, plus $2,000 to get out of the contract. But they cut the bleeding, moved on, and that's money. I mean, imagine what you can do with $18,000. You can take that and you can put it in your profit account, or you can take that as an owner, as an owner's draw, and compensate you. So knowing your numbers. Again, I know it's not fun, but 15 minutes. All right. And then, one more question. We got another one?
Got a question from Susan here. Is that, can you go back? Actually, I think it'll help explain this. The whiteboard that you have.
Yep.
Susan asked, what's the difference between the owner's comp and the profit account?
Okay. Great question. Okay. So we've got the income account. We've got the profit account, tax account, owner's compensation, owner's comp, and then OPEX. Okay. So the difference between the profit account and the owner's comp. So let me maybe go and define that a little bit more. The profit account is money that is pure profit for your business. And having the profit account allows you to do a couple things. One, first off, personally, I think that there should be one more account that every company has, and that's your vault account. That's the old Dave Ramsey 3 to 6 months worth of total operating cost, so that if, I don't know, a pandemic hits, that you've got cash on hand in order to sustain your operations for 3 to 6 months. I think that as a whole, there's a lot of entrepreneurs would have been able to be a lot less stressed about 2020 if they had a vault account. But anyway, so the profit account is money that's set aside. That is your profit. And that once a quarter, you take that money out and you do a couple things with it. One, just like, so if you ever own a stock, like a stock exchange, like New York Stock Exchange, publicly traded stock, every quarter, you're probably going to get a dividend. That is a thank you to the owners that have the company, that the owners of the company, the shareholders of the company say, you took the risk on us, so we're going to compensate you. So you're going to take money out of that profit account, even if it's just a little bit, and you're going to celebrate. I mean, being an entrepreneur is so difficult. So you need to take advantage of that, and your business generates a profit. So that profit, you need to be compensated with some of that. That's out of the profit. What do you do with the rest of it is that you can fund that vault account in order to make sure that you've got enough money for that rainy day for continued operations. Maybe you take that profit account and maybe you pay down some debt with it. Maybe you take that and maybe you strategically set that money aside and say, look, I'm going to expand into a new area, and it's going to cost me $100,000 to buy equipment. for that, and I don't want to get a loan for that. So I'm going to take some of that money, I'm going to set it aside and have that as kind of like an emergency or an equipment fund. But whatever it is, you are strategically doing that. You are doing that on purpose. Now, the difference between that and the owner's compensation account is that owner's compensation account is there to support all of the things that the business supports for the owner, all the things that the owner gets compensated for. A lot of entrepreneurs, they've got personal vehicles that the business owns. They obviously have their salary, their W-2 income, but it is money that is set aside for that specifically. And when he, in just a second, we're going to talk about what I think you can expect with this, and I'm going to hone in on that owner's comp account a little bit. So I'm sorry, that's a little bit long-winded, but they are separate. Profit account is what you do with profits. Owner's comp is to make sure that the owner's personal lives are taken care of and that they can be sustained. Hope that answers the question. So, okay. So, couple of things. So 3 action items. 1, open up a profit account, start with every deposit, move 1% over it. 2, set up a time and start looking at your financials and start understanding what you can do. Okay. And so the bonus one for that is that we actually had one of our future guests told me that, hey, this is what made Profit First most impactful for him. He actually went and changed his OpEx account, his operating expense account. And he did that because he realized he had so many automatic drafts that were coming out of his account. He just forgotten about them. And so that's kind of extreme, and that can be done. But the bonus tip is go in and get a separate debit card or a credit card for your business and have it be like a Jim Smith AP, accounts payable. And then go to every single thing that you've got set up as an auto draft and have them tied to that debit card or that credit card. That does a couple things. 1, it forces you to go into every single one that you've got auto draft, and you can make a decision. Okay, this is something I really want to have, or why in the world am I paying for that phone system that I haven't used in a year? 2, it helps protect against fraud. I hate when entrepreneurs open up and give their routing and account number to any other business. I don't care if it's the utility business. I don't care if it's your insurance company. I don't care who it is. I mean, the one exception, okay, it probably is okay to do it for your bank for any drafts on your loans. But the fact of the matter is Target, IRS, everybody gets hacked. And the fact of the matter is I don't know who has access to that routing account number. If you have all those auto drafts, I understand you set them up for convenience, but if you have all those auto drafts set up on that separate card and there's any type of fraud, it's 1, you're not fighting to get money back into your account. It's a simple transaction, and then MasterCard or Visa takes care of it. But then 2, it also protects and forces you to know what auto drafts you have. And I'd be willing to bet you that you'll probably have 1 or 2% of your expenses automatically eliminated by just going in and finding what auto drafts they are. All right. And then the third tip, read the book. I mean, we talked about super high level, and this system is simple, but it's not easy. It's really not. And to be able to come through. So I would love to talk more about Profit First with you. I'm a nerd about Profit First. I am one of 2 certified Profit First bankers in the world. Most Profit First professionals are accountants, bookkeepers, or coaches. I saw that, and quite frankly, I want to say thank you to Chris here publicly, because Chris is the one that actually turned me on to Profit First. But I'm one of 2 Profit First bankers in the world that helps clients with this. And the other guy, he's not even really using it. But the fact of the matter is that I am certified by Mike Michalowicz and Ron Saharian, the creators of Profit First Professionals, and to be able to help coach you along and help this. This is an easy system, but it's not simple. And so to be able to help that way. In fact, I am so adamant about the fact that you need to read this book, that the first 3 people that will send me an email to greg@theentrepreneursbanker.com. greg@theentrepreneursbanker.com. In the subject line, put Profit First Book. And then in the message, give me your name, give me your address. If you would prefer an audiobook, give me your email address and I'll get an Audible subscription for you for the book. You need to have it. So for the first 3 people that email me at greg@theentrepreneursbanker.com, I'll do that. All right. You need to read this book. I swear it will change your life. Okay. So we're going to, I'm going to take 5 more minutes and then we're going to open it up for questions. So you've gone in and you've started to implement Profit First. And so congratulations. I know that it's different. What can you expect? First thing that you can expect is freedom. All right. This is back to the owner's compensation account. I've got a client that implemented Profit First, and he's told this story. He is in an industry that's very seasonal, and he grew up in the industry. Literally, his mom and dad had a business in this industry. And he said, Greg, during the summer, I'm used to eating steak and lobster, and the winter is ramen noodles and beanie weenies. And I'm tired of it. I'm sick of it. I don't want to do that. And so we implemented Profit First, and we implemented it during his busy time. So the first 6 months, and usually his slow times from the beginning of November to the beginning of March. And so about 4 months there. And I talked to him after implementing Profit First, and he says, Greg, if my company doesn't have a single dime of revenue between now and April, I've got enough money in my owner's compensation account in order to pull out what I have to pull out every single month in order to meet my family's expenses. He says, this is amazing. I'm not having to stress about Christmas presents this year. I'm not having to worry about going to travel to see business, to see family during the holidays, because I know this system has given me freedom to be able to do that. And it's not only freedom beyond that. The next year, he and his wife bought the house, their dream house. They've always wanted some land, and they've always wanted to be able to have some acreage so that they can go out and have their kids run around. And they were able to do that. And this isn't because of me. It's because they were disciplined enough to implement Profit First, to be able to shrink the cash crunching monster that was their business and be able to say, no, I'm going to set money aside. And if we don't need to spend money on it, we're not going to. But that gives them freedom. The second thing is that it'll give you peace. The very first $1 million loan that I ever did when I was in banking was for a client to pay the IRS back. Now that's a loan that probably would not ever happen today, but could you imagine the amount of stress and anxiety and pain, one, of having that bill, but then 2, having to fight it and go back and forth, and $1 million. But to have the peace of knowing that whatever your tax liability is, you've got money set aside in that tax account. So let's play some what ifs. So let's say that you've got $50,000 set aside in that tax account. Let's say that you took whatever percentage, 5, 10, 15%, whatever, and you've got $50,000 in that tax account. Well, at the end of the year, honestly, you're probably going to be running to your accountant to be able to say, hey, I want to get my taxes done because I want to see if I can get some money back. But your accountant's going to go process the tax, and they're going to be like, hey, I've got great news. Hey, great news. You have $100,000 in profit. Bad news. You've got a $30,000 tax bill. And you say, no, that's great news and great news. Because 1, I've got cash in my profit account, but 2, I've got $50,000 sitting in my tax account. Well, if I only have to give Uncle Sam, my silent partner, 30 grand of that, then guess who got a $20,000 bonus? You did. Okay, so alternatively, what else? Maybe there isn't some depreciation. There's not some accounting magic that they do, and you owe $60,000 in taxes. Well, I mean, that kind of stinks, but it's a heck of a lot easier to come up with 10 grand than it is to come up with 60 grand. So you will have freedom by having the Profit First system. And so those are the 2 positive things. The one thing I want, fair warning, I have had talk with some clients, and you need to be prepared for some opposition to this. And the two main areas that I want you to be aware of. One, your accountant, bookkeeper, whoever that is, whoever's doing all the reconciliation, they're going to be like, oh my gosh, I'm used to having one account to reconcile every month. And now you want me to do 5 or 6 or 7? Well, okay, think about it first. So one, most profit first professionals are accountants, bookkeepers, or coaches, but accountants and bookkeepers. So if the whole system was going to make their lives a lot more difficult, then I don't think that they would be helping their clients with it. But think about it. Right now in your account that you have to reconcile all your deposits. Well, all those deposits just happen to be into the income account, right? And then your profit account, you only have a distribution. If you do this, so say you make the distributions into the different accounts on the 10th and the 25th of each month. Well, then the only thing, your profit account just sits there and you have 2 transactions into it. I'm not an accountant, I'm not a bookkeeper, but I don't think it's probably that hard to do 2 transactions into that. And then same thing for your tax account. Same thing for your owner's comp. There might be a little bit more, but then your OPEX, well, you're having to reconcile the OPEX anyway with all those expenses anyway. So it's really not that much more. In fact, because you're cutting expenses, you probably have less in that. So you probably could get some pushback and be like, well, you don't need to have all those accounts. You can have it in that one, and we'll make a spreadsheet, and you'll say, okay, this much is for your profit, this much is for your tax, and you can just have it all in one account. You don't need to do that. It's too much to reconcile. How's that working for you now? I mean, are you profitable? I mean, do you have a vault account? Do you have money that's set aside for you and for your taxes? And I'm just saying that try, again, baby steps. Open up that one account, move 1% over. Try it, and then let's talk through it. The second place that you probably get some pushback, quite frankly, is probably going to be your banker. And some banks charge for lots of, having business accounts. And if that's the case, then talk with your banker, work with them. If quite frankly, if you want to contact me and have me talk to the banker so that I can speak bank nerd, I speak fluent bank and I speak fluent profit first. So let me kind of help with that. If it's still not a place, because some banks just don't have systems that they're not profit first friendly. But if you go to profitfirstprofessionals.com, you'll actually see a list of banks that are profit first friendly and banks that help to eliminate any service fees or anything that's associated with that. So that's kind of going to wrap it up for kind of our discussion today. I want to take some time. First off, I want to say thank you so very much for allowing us to speak into you and your business, and for allowing the Aggie Growth Hacks community to be able to serve you and help you. I hope that you'll join us, and we'll take a couple questions, and then I'll give you a preview of what we've got next week or next month. But is there anybody that has any questions that are out there that I can help with?
I've got one question, and this is for me. How does this work with like QuickBooks and all that kind of stuff? I understand the whole concept of you're taking money from the first account and putting it in all these other accounts, right? But how does that truly work, with QuickBooks and with most accounting systems?
So obviously you do have multiple accounts, and you've got to reconcile each one of those accounts. Most banks have APIs or the ability to suck the information out of those accounts into the QuickBooks. Now, are you talking about like, okay, the actual transition, so that there's a transaction from the income account into the profit account? Well, that's obviously not, that's not an expense, or that's not revenue. Everything that goes into the income account would be considered revenue. So it's just, think about it this way. Imagine if you have an operating account and a vault account, a savings account, and you needed to move money from, say you've got to make payroll, it's 15 grand, and you got 5 grand in your operating account, and you need to move money from your vault account, your savings account, into the operating account in order to make that. Well, that transaction is just a transfer from one asset to another asset. It's just where it's realized on the balance sheet. So it's a balance sheet movement. It's not that. So does that make sense? I mean,
yeah, appreciate it. So Agnes has a question. She says, I was late. Can you tell me what's the difference between normal profit first and profit first banker?
Sure. Yeah. So I am a certified profit first banker. Well, and Agnes, thank you so much for joining us. So I'm a profit first banker, and what that means is I've actually gone through the certification process. Their Profit First Professionals is a company that was established by Mike Michalowicz and Ron Saharian. Obviously, Mike's the author of Profit First, and this is a company that trains individuals to become certified Profit First professionals, to be able to help entrepreneurs implement Profit First in their business. And so Profit First is the system. I am just the world's only Profit First banker. There's two certified Profit First bankers. I'm the only one that's actually doing anything with it. So that's kind of the difference. And then any other questions?
Yeah, she actually also said, and can you mention again how to get the free book?
Sure. Yeah. So send me an email at greg@theentrepreneurbanker.com. greg@theentrepreneurbanker.com. That's the Entrepreneurs Banker, that's kind of my personal brand. That's something that I created a couple of years ago to, one, allow me to have a little bit to scratch my creativity itch and allow me to write articles and do videos and produce classes that I think help entrepreneurs. But two, it also allows me to be so much more empathetic to entrepreneurs, because when you're creating something, even if it's a non-revenue producing brand, you've got to kind of set goals and look into the future and be like, here's what I'm going to do. And this is what entrepreneurs do every day. But as a banker, I don't necessarily have to see the world that way. So this allows me to see your world a lot clearer. So greg@theentrepreneurbanker.com. So great. Well, is there anything else that we've got out there? Again, thank y'all so much for joining us. Okay. All right. So I hope that you join us next month. And so we are going to be doing this again in March. It'll be March 19th, 10 a.m. And we'll make sure that we get all the social media and get the branding and everything, or get the links out so that you can sign up. But we're going to be talking about branding. And Tim Douglas, CEO of Fidelis Creative Agency, great friend and podcast attendee that we had on earlier. Tim's going to do the same thing. He's going to talk real high level about why it's important to have a very clear and concise brand, and then to be able to give you some very tactical tips of how you can develop your brand, how you can be clear and communicate your value to your target audience, the people that you want to attract. So thank you all so much again. On behalf of Greg Martin and Chris Hunter, thank you for joining us. We are excited to be able to bring this to you. Thank you to the McFerrin Center for Entrepreneurship for sponsoring Aggie Growth Hacks and allowing us to be able to produce this content. We really are excited to be partners with them. And if you haven't seen all that the McFerrin Center has for you, the entrepreneur, make sure that you check them out. And really look the anticipation for next month's class, but then also be on the lookout for season 3 of Aggie Growth Hacks, as we're in production right now, and look excited to do that. So until next time, on behalf of Greg Martin and Chris Hunter, thanks and gig 'em.